Welcome back. Amanda Stickle here as we continue going through the IRS Publication 334 Tax Guide for Small Businesses, for those of you using the Schedule C. So now today we are going to go into some more fun information. So we're going through Chapter 1, Filing and Paying Business Taxes. So let me know, you guys, in the comments if you have any questions, and make sure you subscribe so you can continue on learning how to plan and prepare and pay for your business taxes throughout the year through the IRS. So the introduction, this chapter explains the business taxes you may have to pay and the forms you may have to file. It also discusses taxpayer identification numbers. Table 1.1 lists the benefits of filing electronically. Table 1.2 lists the federal taxes you may have to pay, their due dates, and the forms you use to report them. Table 1.3 provides checklists that highlight the typical forms and schedules you may need to file if you ever go out of business. Tip: you may want to get Publication 509 tax calendars. It has tax calendars that tell you when to file returns and make tax payments. Very helpful. So useful items you may want to see. So we have a list of publications: 505 for tax withholding and estimated taxes, 535 for business expenses, 583 starting a business and keeping records, and we'll go through each of these. Form and instructions. 461, limitation on business losses. 1040, your U.S. individual income tax return. 1040 SR is for seniors. 1040 ES is for estimated tax for individuals. 7205 is energy efficient commercial buildings deduction. Schedule C for Form 1040 is the profit or loss for businesses. Schedule SE 1040 is self-employment tax. Okay, so identification numbers. This section explains 3 types of taxpayer identification numbers, or TINs, who needs them, when to use them, and how to get them. Social Security number, SSN. Generally, use your Social Security number as your taxpayer identification number. You must put this number on each of your individual income tax forms, such as Form 1040 and its schedules. To apply for a Social Security number, use Form SS5, Application for a Social Security Card. This form is available at Social Security Administration, SSA offices, or by calling 800-772-1213. It's also available on the website. If you are a U.S. resident, most likely you already have a Social Security number when you were born. Individual taxpayer identification number, an ITIN. The IRS will issue an ITIN if you are a non-resident or resident alien and you do not have or are not eligible to get a Social Security number. The ITIN will expire for any taxpayer who does not file a federal income tax return or who is not included as a dependent on the return of another taxpayer for 3 consecutive years. In general, if you need to obtain an ITIN, you must attach Form W7, Application for IRS Individual Taxpayer Identification Number, with your signed, original, completed tax return and any other required documentation, and mail them to the address in the instructions for Form W7. Exceptions are covered in the instructions. If you must include another person's Social Security number on your return and that person does not have and cannot get a Social Security number, enter that person's ITIN. This application is also available in Spanish. Caution: an ITIN is for tax use only. It does not entitle the holder to Social Security benefits or change the holder's employment or immigration status. Employer identification number, EIN. You must also have an EIN to use as a taxpayer identification number if you do either of the following things: pay wages to 1 or more employees, file pension or excise tax returns. If you must have an EIN, include it along with your Social Security number on your Schedule C as instructed. You can apply for an EIN online by clicking on the Employer ID Numbers EINs link at irs.gov/EIN. As long as the principal business location is in the United States or U.S. territories, the EIN is issued immediately once the application information is validated. You can also do it by telephone or by mailing or faxing the Form SS4. So with EINs, if you have a business I recommend to have an EIN regardless if you have employees or not, because it just helps when you have to fill out forms like a W-9. You put your EIN number on there instead of your social security number. So it just kind of keeps your social security number a little bit more protected. And you would just add this to the Schedule C, which is attached to your 1040. So you're filing your taxes with both your social security number and your EIN. It's just, and usually too, if you have a business, you're getting a separate business bank account, and usually banks require you to have an EIN and the IRS letter with your EIN number on it, just for proof of identification and proof that you actually are a business. So I do recommend to have an EIN. New EIN. Oh, and it is completely free to get on IRS.gov, and it takes about 5 to 10 minutes to go through that application online. So definitely easy and recommended, and the IRS has been really great with their system and updating it to have lots of instructions and like hints as far as how to fill out the application, so there's no mistakes. New EIN. You may need to get a new EIN if either the form or the ownership of your business changes. For more information, see Publication 1635, Understanding Your EIN. So if you start as a sole proprietor and then go to a partnership or an S Corp, there may be a situation there where you need to get a new EIN. When you need identification numbers of other persons. In operating your business, you will probably make certain payments you must report on information returns. These payments are discussed under information returns later in this chapter. You must give the recipient of these payments, the payee, a statement showing the total amount paid during the year. You must include the payee's identification number and your identification number on the returns and statements. Employee. If you have employees, you must get a social security number from each of them. Record the name and social security number of each employee exactly as they are shown on the employee social security card. If the employee's name is not correct as shown on the card, the employee should request a new card from the SSA. This may occur if the employee's name was changed due to marriage or divorce. Form W-4, Employees Withholding Allowance Certificate, is completed by each employee so the correct federal income tax can be withheld from their pay. If your employee does not have a social security number, they should file Form SS5 with the SSA. Other payee. If you make payments to someone who is not your employee and you must report the payments on an information return, get that person's social security number or EIN. If you must report payments to an organization such as a corporation or partnership, you must get its EIN. To get the payee's social security number or EIN, use Form W-9, Request for Taxpayer Identification Number and Certification. A payee who does not provide you with an identification number may be subject to backup withholding, which I believe is 28% right now. For information on backup withholding, see the instructions for the requester of Form W-9 and the general instructions for certain information returns. Income tax. This part explains whether you have to file an income tax return, and when you file it, it also explains how you pay the tax. Do I have to file an income tax return? You have to file an income tax return for 2022 if your net earnings from self-employment were $400 or more. If your net earnings from self-employment were less than $400, you still have to file an income tax return if you meet any other filing requirement listed in the instructions Form 1040. So when they're referring to net earnings from self-employment income, you will have any revenue that you earned, any deposits, any cash or checks you received, and then you're going to reduce the total amount of income revenue that you received by any business expenses, which we'll talk about later on, and then whatever is left over, the difference between your revenue and any expenses in things that you purchase for your business, is your net earnings. So if you only have business income and it's less than $400 and you don't have any other sources of income or any other situation, then you do not have a income tax filing requirement. How do I file? File your income tax return on Form 1040 or Form 1040 SR and attach Schedule C. Enter the net profit or loss from Schedule C on Schedule 1, Form 1040. Use Schedule C to figure your net profit or loss from your business. If you operated more than one business as a sole proprietorship, you must attach a separate Schedule C for each business. IRS e-file electronic filing. You may be able to file your tax returns electronically using an IRS e-file option. Table 1.1 lists the benefits of IRS e-file. IRS e-file uses automation to replace most of the manual steps needed to process paper returns, and it's less likely to get lost in the mail. As a result, the processing of IRS e-file returns is faster and more accurate than the processing of paper returns. As with a paper return, you are responsible for making sure your return contains accurate information and is filed on time. Using IRS e-file does not affect your chances of an IRS examination of your return. You must file most commonly used business forms using IRS e-file. For more information, go to irs.gov. Electronic signatures. Paperless filing is easier than you think, and it's available to most taxpayers who file electronically, including those first-time filers who were 16 or older at the end of 2022. If you file electronically using tax preparation software or a tax professional, you will sign your return using the self-select PIN, personal identification number method, for IRS e-file. If you are married filing jointly, you and your spouse will each need to create a PIN and enter these PINs as your electronic signatures. To create a PIN, you must know your adjusted gross income, AGI, from your originally filed 2021 income tax return, not from an amended return, Form 1040X, or after receiving any math error notice from the IRS. So it has to be the original AGI that you filed. You will also need to provide your date of birth. Make sure your date of birth is accurate and matches the information on record with the Social Security Administration before you e-file. To do this, check your annual Social Security statement. With a self-select PIN, there is nothing to sign and nothing to mail, not even your Form W-2. For more information, for more details on the self-select PIN method, go to irs.gov. State returns. In most states, you can file an electronic state return simultaneously with your federal return. For more information, go to your state tax agency. Refunds. You can have your refund check mailed to you, or you can have your refund deposited directly to your checking or savings account. With IRS e-file, your refund will be issued in half the time as when filing on paper. Most refunds are issued in less than 21 days. Offset against debts. As with a paper return, you may not get all of your refund if you owe certain past due amounts such as federal tax, state tax, a student loan, or child support. You will be notified if the refund you claimed has been offset against your debts. Refund inquiries. You can check the status of your refund if it has been at least 24 hours, 4 weeks if you mailed a paper return, from the date you filed your return. Be sure to have a copy of your tax return available because you will need to know the filing status, the first Social Security number shown on the return, and the exact whole dollar amount of the refund. To check on your refund, do one of the following. Go to irs.gov/refund, or download the free IRS To Go app, or call 1-800-829-1954 for automated refund information. The IRS can't issue refunds before mid-February 2023 for returns that claimed the Earned Income Credit or the Additional Child Tax Credit. This applies to the entire refund, not just the portion associated with these credits. And you can expect the same to happen for this tax season as well. Balance due. If your return shows that you owe tax, you must pay it by the due date of your return without regard to any extension to file. To avoid late payment penalties and interest. For calendar year 2022, pay by April 18th, 2023. You have many options for making your payment, including by scheduling an electronic funds withdrawal from your checking or savings account or by credit card. For more information about your payment options, go to irs.gov/payments. So what this is saying is you can file your tax return at any time by April 18th. So if you file it earlier, You don't have to pay it then. You have to at least pay it by April 18th, though, by that deadline. If you file an extension on April 18th and you don't plan to file the complete tax return by October 18th, you are still required to pay your tax due by April 18th. So you still have to know what your tax due is going to be. If you don't pay that full amount due by April 18th or your tax return due date, then you will start accruing penalties and interest for late payment. Using an authorized IRS e-file provider. Many tax professionals can electronically file paperless returns for their clients. You have two options. You can prepare your return, take it to an authorized IRS e-file provider, and have the provider transmit it electronically to the IRS. Number two, you can have an authorized IRS e-file provider prepare your return and transmit it to you electronically. You'll be asked to complete Form 8879, IRS e-file signature authorization, to authorize the provider to enter your self-selected PIN on your return. Depending on the provider and the specific services requested, a fee may be charged. To find an authorized IRS e-file provider near you, go to that website. More often than not, you will find more authorized IRS e-file providers that will prepare your return. Not all of them will transmit the return for you. So just be mindful of that. And there may be a fee for both of those services. If you are you're to prepare your return and then go to an IRS provider to submit your return, they may still request and require you to pay them a fee to do that. Using your personal computer. A computer with internet access is all you need to file your tax return with using IRS e-file. When you use your personal computer, you can e-file your return from your home any time of the night or day. Sign your return electronically using a self-selected PIN to complete the process. There is no signature form to submit or Form W-2s to send in. There are free software options for doing your taxes. If your AGI or adjusted gross income was $73,000 or less in 2022, you can use free tax software to prepare and e-file your tax return. Free File. This public-private partnership between the IRS and tax software providers make approximately a dozen brand name commercial software products and e-file available for free. Go to irs.gov/free file for details. I'd like to say too, more often than not, usually the free file is only for federal tax returns, and then you have to pay for your state taxes. So just to be aware of that. Free file fillable forms. The IRS also offers electronic versions of IRS paper forms that can also be e-filed for free. Free file fillable forms is best for people experienced in preparing their own tax returns. There is no income limitation to using these forms. Free file fillable forms does basic math calculations. It supports only federal tax forms. Filing through employers and financial institutions. Some businesses offer free e-file to their employee members or customers. Others offer it for free for a fee. Ask your employer or financial institution if they offer IRS e-file as an employee member or customer benefit. Free help with your return. Free help in preparing your return is available nationwide from IRS-trained volunteers. The Volunteer Income Tax Assistance, or VITA, program is designed to help low-income taxpayers, and the Tax Counseling for the Elderly, TCE, program is designed to assist taxpayers aged 60 or older with their tax returns. Some locations offer free electronic filing. And then Table 1-1 is your benefits for IRS e-filing. When is my tax return due? For calendar year 2022, Forms 1040 and 1040-SR are due by April 18th, 2023. If you use a fiscal year explained in Chapter 2, your return is due by the 15th day of the 4th month after the end of your fiscal year. If you file late, you may have to pay penalties and interest. If you cannot file your return on time, use Form 4868, Application for Automatic Extension of Time to File U.S. Individual Income Tax Return, to request an automatic 6-month extension. For calendar year taxpayers, this will extend the tax filing due date until October 15th. Filing an extension does not extend the time to pay your taxes, only the time to file the tax return. How do I pay income tax? Federal income tax is a pay-as-you-go tax. You must pay it as you earn or receive income during the year. An employee usually has income tax withheld from their pay. If you do not pay your tax through withholding or do not pay enough tax that way, you might have to pay estimated tax. Estimated tax payments. You generally have to make estimated tax payments if you expect to owe taxes, including self-employment tax discussed later, of $1,000 or more when you file your return. Use Form 1040-ES to figure and pay the tax. If you do not have to make estimated tax payments, you can pay any tax due when you file your return. For more information on estimated tax, see Publication 505. What are my options for paying estimated tax? You can pay your estimated tax electronically using various options. If you pay electronically, there is no need to mail in Form 1040-ES payment vouchers. These options include paying electronically through the Electronic Federal Tax Payment System, or EFTPS, paying with direct pay by authorizing an electronic funds withdrawal when you file Form 1040 or 1040-SR electronically, or by paying by credit or debit card over the phone or by internet. Other options include crediting an overpayment from your 2021 return to your 2022 estimated tax, or mailing a check or money order with a Form 1040-ES payment voucher. For EFTPS, you enroll by going to eftps.gov or calling 800-555-4477. When you request a new EIN, you may be automatically enrolled in EFTPS. Benefits of EFTPS including the following. The chance of an error in making your payments is reduced. You receive immediate confirmation of every transaction. Payment for underpayment of tax. If you did not pay enough income tax and self-employment tax for 2022, by withholding or making estimated tax payments, you may have to pay a penalty on the amount not paid. The IRS will figure the penalty for you and send you a bill. Or you can use Form 2210, Underpayment of Estimated Tax, by individuals, estates, and trusts, to see if you have to pay a penalty and to figure the penalty amount. For more information, see Publication 505. So a safe harbor method to avoid underpayment of tax is to make sure that you're paying at least what you owed last year in taxes, and not just the tax liability. Like if you look on your tax return and see your total tax line before withholding and credits and all that, use that as your safe harbor, and paying that throughout the current year can help be a safe harbor for that underpayment penalty. Self-employment SE tax. SE tax is a Social Security and Medicare tax primarily for individuals who work for themselves. It is similar to the Social Security and Medicare taxes withheld from the pay of most wage earners. Caution: if you earned income as a statutory employee, you do not pay self-employment taxes on that income. Social Security and Medicare tax should have already been withheld from those earnings. Social Security coverage. Social Security benefits are available to self-employed persons just as they are to wage earners. Your payments of SE tax contribute to your coverage under the Social Security system. Social Security coverage provides you with retirement benefits, disability benefits, survivor benefits, and hospital insurance, Medicare benefits. Caution: be sure to report all of your self-employment income. By not reporting all of it, you could cause your Social Security benefits to be lower when you retire. So a note on this, and what they're basically trying to say is it's not always beneficial to show a loss from your business on your tax return, because what that does is it reports that you aren't earning any income and you're not therefore contributing to the Social Security account, and therefore you have no retirement benefits unless you have other means that you're saving for retirement, maybe through a retirement account like an IRA or something like that. So just be mindful that it's not always a good thing to have a lost or lower income. Making sure that you report all of your income and paying the appropriate taxes will be beneficial to you when you go to retire. How to become insured under Social Security. You must be insured under the Social Security system before you begin receiving Social Security benefits. You are insured if you have the required number of credits, also called quarters of coverage, discussed next. Earning credits in 2022 and 2023. For 2022, you received 1 credit up to a maximum of 4 credits for each $1,510 or $1,640 for 2023 of income subject to Social Security taxes. Therefore, for 2022, if you had income, self-employment, and wages of $6,040 that was subject to Social Security tax, you received 4 credits. 4 credits, which is $6,040 divided by $1,510. For an explanation on the number of credits you must have to be insured and the benefits available to you and your family under the Social Security program, consult your nearest SSA office. Caution, making false statements to get or to increase Social Security benefits may subject you to penalties. The SSA time limit for posting self-employment income. Generally, the SSA will give you credit only for self-employment income reported on a tax return filed within 3 years, 3 months, and 15 days after the tax year you earned the income. If you file your tax return or report a change in your self-employment income after this time limit, the SSA may change its records, but only to remove or reduce the amount. The SSA will not change its records to increase your self-employment income. So again, this is just saying file your accurate tax returns on time. Who must pay self-employment tax? You must pay self-employment tax and file Schedule SE with the Form 1040 if either of the following applies. 1. Your net earnings from self-employment excluding church employee income were $400 or more. 2. You had church employee income of $108.28 or more. Caution, these self-employment tax rules apply no matter how old you are and even if you are already receiving Social Security or Medicare benefits. SE tax rate. The SE tax rate on net earnings is 15.3%, 12.4% Social Security tax plus 2.9% Medicare tax. It is the same as if you are a typical employee and getting a W-2, it's the same as your employee taxes that you're having withheld from your paychecks. This is just doubled because now you are both the employee and the employer for yourself. Maximum earnings subject to SE tax. Only the first $1,407,000 of your combined wages, tips, and net earnings in 2022 is subject to any combination of the 12.4% Social Security part of SE tax, Social Security tax, or the Tier 1 part of Railroad Retirement tax. All your combined wages, tips, and net earnings in 2022 are subject to any combination of the 2.9% Medicare part of SE tax, Medicare tax, or Medicare part of Railroad Retirement tax. If wages and tips you receive as an employee are subject to either Social Security tax or the Tier 1 part of Railroad Retirement tax, or both, and total at least $147,000, do not pay the 12.4% Social Security part of the SE tax on any of your net earnings. However, you must pay the 2.9% Medicare part of the SE tax on all your net earnings. Tip: deduct 1/2 of your SE tax as an adjustment tip to income on line 15 of Schedule 1, 1040. So what this is saying is if you have a full-time job or you're an employee somewhere else, or you have other positions where you're having taxes withheld and your taxable income is accounted for elsewhere of that at least $147,000, that means anything that you earn in your business or this side job or whatever you're doing as a business owner is not subject to that Social Security tax. Everything is subject to the Medicare tax. So just be mindful of that. And then you get a slight deduction of 1/2 of your Social Security, your self-employment tax as an adjustment to your income. So that helps lower your taxable income on your 1040. Additional Medicare tax. A 0.9% additional Medicare tax may apply to you if your net earnings from self-employment exceeds one of the following threshold amounts based on your filing status. Married filing jointly, $250,000. Married filing separately, $125,000. Single head of household or qualifying surviving spouse, $200,000. If you have both wages and self-employment income, the threshold amount for applying the additional Medicare tax on the self-employment income is reduced, but not below zero, by the amount of wages subject to additional Medicare tax. Use Form 8959 Additional Medicare Tax to figure this tax. For more information on methods of calculating SE tax, see Chapter 10. Which forms must I file? So this is a helpful chart to see the different taxes, the forms to use, and the due dates. So pause that, screenshot that, and take that information for you and save that. Employment taxes. If you have employees, you will need to file forms to report employment taxes. Employment taxes include the following items: Social Security and Medicare taxes, federal income tax withholding, and federal unemployment tax, or FUTA. For more information, see Publication 15, Circular E, Employer's Tax Guide. That publication explains your tax responsibilities as an employer. Caution: do not reduce your deduction for Social Security and Medicare taxes by the non-refundable and refundable portions of the Families First Coronavirus Response Act and American Rescue Plan Act of 2021. Credits for qualified sick and family leave wages claimed on an employment tax return. Instead, report the credits as income. To help you determine whether the people working for you are your employees, see Publication 15-A. That publication has information to help you determine whether an individual is an independent contractor or an employee. Caution: if you incorrectly classify an employee as an independent contractor, you may be held liable for employment taxes for the worker, plus a penalty. An independent contractor is someone who is a self-employed. You generally do not have to withhold or pay any taxes on payments made to an independent contractor. So a lot of times what happens is business owners are trying to avoid all this payroll regulations and requirements and taxes and all that stuff involved with payroll. And they just classify their workers, their employees, as independent contractors to avoid any responsibility and put that all on the independent contractor, the employee, the worker. And that is not accurate, especially when we talked about it last time, is that one quick, easy way to determine if it's an employee versus a contractor is the amount of control that you have over the person. If you're telling them that they have to be at the office, you're telling them where to be, when to be there, how they're going to do things, you're providing training and materials, etc., that is an employee. If you are just saying, hey, I need this type of work done by this deadline, do that, however, whenever, whatever works for you. And they typically have more than one client. You aren't the only person they're working for. That is typically a contractor. And if you do that, if you have employees and you're reporting them as contractors, you can be hit with some hefty fines and penalties and be responsible for the taxes and late fees and interest and penalties for not filing those employment tax returns too. So it's not good. Make sure you're doing that correctly. Excise taxes. This section identifies some of the excise taxes you may have to pay and the forms you have to file if you do any of the following: manufacture or sell certain products, operate certain kinds of businesses, use various kinds of equipment, facilities, or products, receive payments for certain services. For more information on excise taxes, see Publication 510, Excise Taxes. Form 720. The federal excise taxes reported on Form 720, Quarterly Federal Excise Tax Return, consists of several broad categories of taxes, including the following: environmental taxes on the sale or use of ozone depleting chemicals and imported products containing or manufactured with these chemicals. Communications and air transportation taxes, fuel taxes, tax on the first retail sale of heavy trucks, trailers, and tractors, manufacturers' taxes on the sale or use of a variety of different articles, tax on indoor tanning services. That last one kind of seems random, just thrown in there for basically it's anything that they feel like is unsafe. They're adding extra taxes on there. Form 2290. There is a federal excise tax on the use of certain trucks, tractors, and buses on public highways. The tax applies to vehicles having a taxable gross weight of 55,000 pounds or more. Report the tax on Form, I lost my 2290, Heavy Highway Vehicle Use Tax Return. For more information, see the instructions for Form 2290. Depositing excise taxes. If you have to file a quarterly excise tax return on Form 720, you may have to deposit your excise taxes before the return is due. For more information on depositing excise taxes, see the instructions for Form 720. Could you imagine being taxed on exercise? Would it be surprising? I don't know. Information returns. If you make or receive payments in your business, you may have to report them to the IRS on information returns. The IRS compares the payments shown on the information returns with each person's income tax return to see if the payments were included in income. You must give a copy of each information return you are required to file to the recipient or payer. In addition to the forms described below, you may have to use other returns to report certain kinds of payments or transactions. For more information on information returns and when you have to file them, see the general instructions for certain information returns. Form 1099 Miss. Use Form 1099 Miss miscellaneous information to report certain payments you make in your business. These payments include the following items: rent payments of $600 or more other than rents paid to real estate agents, prizes and awards of $600 or more that are not for services such as winnings on TV or radio shows, royalty payments of $10 or more, payments to certain crew members by owners or operators of fishing boats, amounts paid for the purchase of fish for resale from any person engaged in the business of catching fish. You also use Form 1099 Miss to report your sales of $5,000 or more of consumer products to a person for resale anywhere other than in a permanent retail establishment. So typically like direct sales, like MLM businesses, multi-level marketing businesses. Form 1099 NEC. File Form 1099 NEC or non-employee compensation for each person in the course of your business to whom you have paid at least $600 during the year in services performed by someone who is not your employee, including parts and materials, Box 1. Cash payments for fish or other aquatic life you purchase from anyone engaged in the trade or business of catching fish, Box 1. Or payments to an attorney, Box 1. You must also file Form 1099 NEC for each person for whom you have withheld any federal income tax report in Box 4 under the backup withholding rules, regardless of the amount of the payment. If you use Form 1099 NEC to report sales totaling $5,000 or more for consumer products, then you are required to file Form 1099 NEC with the IRS by January 31st. Quick tip with the 1099 NECs. This is if you pay them by cash or check. If you use a third-party payment processor like Stripe, PayPal, credit cards, or like Intuit Payments, then those third-party payment processors have that 1099 filing requirement. with the new 1099K filing requirements, regulations that have just passed. So that has shifted responsibility. That's always been that, but it's kind of shifted more so now that that rule has changed. So just be mindful of that to avoid any duplicate filing. Form W-2. You must file Form W-2 to report payments to your employees such as wages, tips, and other compensation, and withheld income, Social Security, and Medicare taxes. You can file Form W-2 online. For more information about Form W-2, see the general instructions for Forms W-2 and W-3. Penalties. The law provides for the following penalties if you do not file Forms 1099 MISC, Forms 1099 NEC, or Forms W-2, or do not quickly report the information. For more information, see the general instructions for certain information returns. Failure to file information returns. This penalty applies if you do not file information returns by the due date, do not include all required information, or report incorrect information. Failure to furnish correct employee statements. This penalty applies if you do not furnish a required statements to a payee by the required date, do not include all required information, or report incorrect information. Waiver of penalties. These penalties will not apply if you can show that the failure was due to reasonable cause and not willful neglect. In addition, there is no penalty for failure to include all required information or for including incorrect information on a de minimis or small number of information returns if you correct the errors by August 1st of the year the returns are due. A de minimis number of returns is the greater of 10 or 1/2 of 1% of the total number of returns you are required to file for the year. They just like to add in some crazy numbers. Form 8300. You must file Form 8300, Report of Cash Payments over $10,000 received in a trade or business if you receive more than $10,000 in cash in one transaction or two or more related business transactions. Cash includes U.S. and foreign coin and currency. It also includes certain monetary instruments such as a cashier's or traveler's checks and money orders. Cash does not include a check drawn on an individual's personal account, personal check. For more information, see Publication 1544, Reporting Cash Payments of over $10,000. Penalties. There are civil and criminal penalties, including up to 5 years prison for not filing Form 8300 filing or causing the filing of a false or fraudulent Form 8300 or structuring a transaction to evade reporting requirements. So don't do bad things. Report what you need to report. And then Table 1-3 is going out of business checklist. So the following checklist highlights the typical final forms and schedules you may need to file if you ever go out of business. For more information, see the instructions for the listed forms. So if you go out of business, if you are liable for income tax, then you may need to file a Schedule C with your Form 1040 in the years which you go out of business, file Form 4797 in the year in which you sell or exchange property used in your business or in which the business use of certain Section 179 or listed property drops to 50% or less. File Form 8594 with your 1040 if you sold your business. Self-employment tax, file Schedule SE with your Form 1040 in the year in which you go out of business. Employment taxes, file Form 941 for the calendar quarter in which you make your final wage payments. Do not forget to check the box to let them know that it is the date of the final wages were paid. And then file Form 940 on the calendar year in which the final wages were paid. Again, do not forget to check that box, that final business closed box. Information returns, provide Forms W-2s to your employees, file your final W-3s with your W-2s, provide Forms 1099 MISC, 1099 NEC to each person to whom you have paid at least $600 for services, in the year in which you go out of business, and file Form 1096. It's like the annual combined of all those 1099 MISC and NECs for that information. So that is Chapter 2, or Chapter 1, I'm sorry, and then Chapter 2, which is coming up next, we'll go over accounting periods and methods. So again, thank you for joining me as we go through this tax guide to help you with your small business taxes and be more informed and educated. And a reminder that this is for educational purposes, and always reach out to a tax professional if you have specific questions about your situation. And please subscribe and share so more small business owners can have more helpful information and understand their business taxes. As always, if you have any questions, please leave a question or comment in the comments, and I would be happy to respond to you.